crypto is the purest form of capitalism. There's things like gaming, are we able to kind of tie in AI at some point? That's a sector that I still think will see get some traction. We kind of had this mini hype wave at the end of last year into the beginning of this year. We ended up not really seeing any real agents come out of that at all. Man, well, like if this is like the NFT bubble part 2, then like these miners are about to be printing and they're like low-key undervalued. I don't know if anybody's ever asked me that before.
With the investing and trading, they want to grow their Twitter account. What would your advice be to them? Welcome to the Deco podcast, where we bring you stories from founders and investors in Web3. Before we get started, this is not a financial or legal advice. It's just a conversation about things we find interesting in Web3. Views expressed are our own personal opinions. Deco members or guests appearing on the show may have positions on assets they talk about. All right. Welcome to another episode. Today we have with us Will Clemente. Now, Will is someone I've been following, God knows for how many years now. I got curious about his account from the Bitcoin related analysis, on-chain analysis that he used to post. And then, since I started following him, I understood that, okay, this guy is pretty deep in investments across the board, right? I mean, it's not just crypto. He pretty much understands the markets, whether that is traditional equities, a little bit of macro. And of course, I mean, Bitcoin is one of those people who made on-chain analysis famous at one point. He had also started Reflexivity Research, and which was sold to a company that is listed on stock exchanges in the US. Welcome to the show, Will.
Hey, man. Thanks so much for the great intro. That might be the best intro I've ever gotten. It's great to be here. I know that at one point we had to delay this, and I'm glad we were finally able to hop on and looking forward to jamming with you, man.
Awesome. Fantastic. Let's start from the beginning, right? I want to understand where your interest in trading and investing comes from. Is that a family thing? Is that because you were surrounded by such people? Just walk us through the interest.
Yeah, sure. I think I always enjoyed, whatever I was doing, I always liked to go all the way in and do it. Going back to silly things like in middle school, I, traded sneakers and I'd walk around school with like one notebook in my book bag and like a bunch of sneakers and like shoes tied up on the straps of my book bags, trying to, make deals with people in school and stuff. I never really, I kind of bounced back and forth, just typical stuff, played almost every sport when I was younger and never really had like a, super deep calling, so to speak. Come COVID. So basically, I was in my sophomore year of college. We got sent home from school for COVID. And, this is like, everybody likes to joke around that I used to work at Target. It was just like a college job that I had at the time. Basically what happened was we had this drawdown in the markets. I had already like started to kind of get interested in investing because previously I was working this like overnight stocking job when I got sent home for winter break and needed basically like beer money for my second semester. Started listening to like basic investment podcasts, value investor, related things. I've got Benjamin Graham behind the security analysis, the intelligent investor, and all of the basic stuff that somebody gets at the beginning. I'm trying to do like discount cash flow models at my desk or whatever, trying to figure stuff out. And then, COVID happens. Now I'm doing this job at Target. I see kind of the market rebounding, obviously, at the same time that, there's kind of this divergence in the economy. So initially, I decided it was a good idea to buy, I think I bought like Boeing and then I bought Marathon, the oil company. Might have been like the two first stocks that I ever bought like around the bottom of COVID, because I don't know, I just thought like we were going to see a rebound in people traveling and, that the oil sell-off was oversold. I guess I don't really have like any like deep level of thinking to it, but the market started to recover from there more broadly. And then the economy wasn't necessarily recovering. And so I was kind of like, okay, it's because they're putting all this liquidity into the system. And then I kind of go down that whole rabbit hole. And then I very quickly kind of shifted my thinking into, I just need to own as much Bitcoin as I can. And so, basically like went all in on BTC, started kind of tracking, some of the factors that drive BTC, just, fell in love with the markets in general throughout the whole process of that, trailing 6-month period. And yeah, from there, I follow the markets all day. It's my favorite thing, in the world, and nothing like stimulates my brain as much, I would say. Obviously, I've been pretty Bitcoin focused. I'm not really an expert, I would say, anywhere else. I'm not even an expert in crypto, so definitely can't be an expert anywhere else. But, I do try to follow as much as I can and try to kind of stay in the loop on other things outside of just the crypto world.
Where does starting and selling research falls into all of this?
Yeah. So I had kind of built up a pretty large Twitter account throughout the 2020 to 2022 period. Like you said at the beginning, I think a lot of people initially knew me because, I kind of just started off just talking about Bitcoin as an investment opportunity. Over time, shifted kind of towards thinking about the markets like a little more tactically than just high level, like Bitcoin's going to go up over the next 20 years type of thing. At the time, I found a lot of the on-chain stuff very interesting because it was very unique to Bitcoin. But, as kind of time passed, I felt like, there was less signal on that. I started, kind of becoming more of just a bread and butter, like following price action, just kind of broader fundamental developments, the derivatives data, some order books data, like that type of stuff would kind of go into the process that I'm still forming now, but had just started forming at the time. And so, I kind of got to the point where, I feel like I had become relatively known for kind of, some of my thoughts about the markets and things like that. I had kind of a pretty large, following. I had never, taken payment to promote a token or something undisclosed or anything like that. I always tried to generally, operate as ethically as possible. And so, I'm sitting here with, the distribution of the account and kind of a reputation for kind of being involved in, crypto research and kind of thinking about the markets and stuff. And so, kind of thought process was, I teamed up with Anthony Pompliano. We basically said, let's go out and just try to, take the distribution, pair it with really high quality research and see what we can do. And we got a couple of really sharp guys and at the beginning to, kind of help create some content. I think we've put out great stuff over the last, couple of years. I stayed on with the firm. We got acquired last year by a publicly traded company. And then recently, about 2 weeks ago or so, kind of surpassed the year point of getting acquired. And so I just recently moved into an advisory role now.
Awesome. Awesome. I think we want to talk about markets. So let's just switch gears and let's talk about markets. All right. So back in COVID, interest rates are near zero or zero across the board, like almost all entire world throughout. Cost of capital and pretty low, pretty cheap. And that drives liquidity and BTC moves forward and goes to whatever, right? 69, 70,000, whatever that times high was, right, from the bottom tick of COVID. So definitely the cost of capital being low has helped risk assets like Bitcoin, right? And that kind of nicely coincided with the 4-year halving cycles that we used to have, or we still have, I don't know, the jury is still out. But now the cost of capital is high. Inflation is back as a result of what a tremendous liquidity being in the market for quite some time as a response to COVID by central banks across the world. Times are different. The price action, I don't know, is different, but we are still stuck in the mindset of 4-year cycles. And, everyone still believes that first there's going to be a BTC pump, then ETH, and then all the altcoins. And what we've seen is like ridiculous amount of dispersion where there are only selected winners in this market, as it is for equities, because even in traditional markets that are more mature, not everything goes up in a straight line, right? So with the cost of capital high, what are you thinking right now? Is the cost of capital going to come down? What happens to interest rates? How much of these macro factors affect niches of crypto? And obviously Bitcoin is kind of a macro asset now.
Yeah, definitely. I think you touched on a lot of really good stuff there. I think, I got pretty publicly cautious, a couple weeks ago around 93 to 95K, but really as we started to move towards the bottom of the range around, 93K ish. Thought process there was basically the following. And, this is definitely not fully, my own originated thoughts, but this has been kind of my view as well. Over the last couple of years, obviously fiscal's been a huge driver of the market, just a tremendous amount of government spending and kind of the.
Yeah, can you just clarify fiscal and monetary before you move on?
Yeah, sure. So fiscal meaning, like for example, people on government payroll, kind of payments that are being made directly to, everyday American consumers and policy actions that are involving that, as opposed to monetary policy, being interest rates, what's decided to do with the issuance of, treasury bills, et cetera. So, over the last few years, the government, I think, has subsidized a lot of growth. The GDP formula, a big component of that is government spending. And so, one thing that, I was in the camp of in 2022, took me a while to kind of figure this out through the coming year and a half. But at the beginning to middle of 2022, I was also kind of in the camp of like, we're probably going to be headed for a recession because the Fed just jacked up interest rates. But when you've got so much government spending that's kind of subsidizing the entire, GDP equation, then it's tough to have any prolonged, serious economic slowdowns. I think, over the last really month and a half since Trump got in, what you've seen is the market kind of shift expectations from Trump's going to be the greatest thing ever for, the markets. Obviously, Bitcoin had an incredible rally after completely gapping up on the election for Trump. Now we've seen, equities come back and fully retrace the rally. Bitcoin not, all the way, but quite a bit recently over the last week or so. And I think it's because that kind of marginal shift in thinking of the market that, we had this kind of euphoric Trump move. And now it's been clear that Trump seems to be serious about, making some changes that could kind of create a drag on the economy. Obviously the tariffs are one component, slowing immigration into the United States. You're also, cutting federal jobs, and the federal government's the number one employer in the United States. And so, I don't think these things are the end of the world, but, when you're near, historic multiples on both, the NASDAQ and the S&P, it's, what's going on relative to what the market is pricing in. And, so I think that's kind of been my view over the last couple of weeks, and shout out to people like Quinn Thompson for kind of helping shape that. You kind of had this asymmetry, I think, of the economy slowing down, or the forward-looking expectations for the economy slowing down relative to what they are. Meanwhile, you've got the market pricing in, basically everything for perfection, and Trump threading the needle of managing everything perfectly. It's kind of like the inverse of what took place towards the back half of 2022. And so again, I don't think, it's the end of the world, but kind of thought process is we probably need to see, a bit of a correction, and, maybe we just kind of grind sideways while, earnings catch up with valuations or something like that for the next couple months. I will say Bitcoin has tended to be kind of a leading indicator in some periods for equities, and alts have kind of been a bit of a leading indicator for what happens to Bitcoin in some time periods. The most evident of this was at the end of 2021. You basically had, Bitcoin kind of put in this kind of SFP, deviation, whatever you want to call it, faked out from the April 21 highs, started to roll back down after Powell basically said that, their number one focus is getting inflation down, and that they were going to, presumably start hiking interest rates. And it wasn't for several weeks, I believe, that equities really started to follow in tandem. I think now, over the last couple of weeks, we've kind of seen a similar dynamic where, we had the super far end of the risk curve get completely whacked. So, in crypto world, we saw all the meme coin stuff started dying out. Obviously, the Trump and Malay thing kind of played a part in that for sure. But we saw the super far end of the risk curve get whacked. Then we started to see assets that were closer in on the risk curve get whacked. We started to see the Solanas, kind of the mid caps get taken down. And then Bitcoin saw this, pretty aggressive move recently. I wouldn't be surprised if, whether the BTC bottom is here or lower, I obviously don't know. But what is my base case is that Bitcoin will probably kind of grind out along the lows while, unless we have some, massive, margin call event or, credit event. I think what happens is Bitcoin can probably grind along the lows while equities, find their, footing after. And then, another kind of leading indicator, which I think is interesting to watch, which is kind of the inverse of what we kind of just described, of like the far end of the risk curve getting taken out first and that kind of imploding in, which is just from a psychological standpoint, it's like, if you all the way, a lot of people do this without even really thinking about it. If you're allocated to some super degen asset, then, you slowly rotate into Sol or you rotate into BTC. Like, this is just a natural thing. And the inverse, I think, takes place, around bottoms as well, where you can start to see these alt BTC pairs bottoming out before, maybe even Bitcoin completely fully bottoms out. or equities as well. So one thing that I've been noticing over the last couple days is that you're starting to see some interesting stuff on these alt BTC pairs. And again, I don't think that's a, pile right back into the market, but it's definitely like a constructive thing, I think, for kind of risk appetite in the market that you're starting to maybe see signs of.
Love it. Love it. I think there are a lot of directions to go into, but let's finish this macro a little bit and then get crypto specific. So you mentioned Trump, right? Now, in his previous term, it seemed like, I mean, I've seen this on Twitter. These are not my views. I just want to understand how you think about this, right? That one of the things that I found interesting on Twitter was this, that someone said that in previous term, stock market seemed like Trump's barometer as a progress gauge of how he's doing or how he's performing or how the administration is performing. And this time around, it seems like the bond yields, inflation, like other stuff, right? Which is probably something that directly has an impact on growth or on America or whatever you want to call it. There is this side and there is other side, which is the debt issue, right? I mean, you have tremendous amount of debt. And if the interest rates are high, the government has to refinance that debt or whatever, right? I mean, the debt payments, interest payments become an issue. So how do you think about like these things? Because on one side, you want to curtail like fiscal spending and your directions are towards making the interest rates like lower because you don't want to make these interest payments.
Yeah, 100%. I think basically Trump and Scott Bessent and the whole Trump administration would like to shift the economy away from reliance on the public sector and towards the private and kind of unlocking further the private sector. Like we mentioned, government spending has been a very large component of, the kind of, GDP performance that we've seen, over the last couple of years, from the 2022 lows. A lot of the rebound in asset prices and the economy was driven by that. And so if Trump can, get yields down, get, interest rates down, get mortgage rates down, then that should unlock credit and, refinancing, opportunities. It should, unlock the housing market, et cetera, in the private market. And so I think kind of the general heuristic for Trump seems to be that they're trying to kind of front load pain early on. They can say, hey, this was partially from spillover from the Biden administration. This isn't our fault, which, things like egg prices, I don't particularly think that that's Trump's fault. So that's kind of my general heuristic, is that they're kind of trying to give the economy and the markets kind of the medicine that they need to take early on, so they can blame it on Biden, so they can say it's early on in the administration, you haven't seen the effects yet, et cetera, and before midterms. And then we should maybe, after we've taken our medicine, kind of see the market price that through over the rest of the term.
Yeah, that's fair. Makes sense. Now you mentioned that you grew your account, I think 21 to 2020 onwards. And now I'm pretty sure that with it, you have had opportunities to invest in early stages, venture rounds, and whatnot, right? So, how was your process or how was your allocation? Has your allocation changed as your account grew? Like, did you start taking more private deals? Like, what has happened with in terms of investments?
Yeah, I have done some private deals. The ones that, stand out, I did like STFX, Velo. I kind of have like an advisory thing going on there. I did the Monad round. I've done a few of these things, but I just, anytime that I post about anything, I always disclose if I were to, do a private round, because I just think that that's the right thing to do if you're going to talk positively about something and you got in a private round. But I just don't really feel like I have a lot of edge there. I prefer liquidity. I think crypto moves so fast. It's tough to make these multi-year bets, especially with a lot of the infrastructure stuff. People send over the last couple of months have been sending me a lot of these like meme coin launchpad things. And it's like, I don't know, they might do great, but I just feel like we're seeing a lot of, the 10th version of certain things. And, you see one version of something do well, and then a bunch of copycats come out and just basically like flood the market immediately. Crypto's like the purest form of capitalism maybe we've ever seen. Just the cycle of poorly allocated capital. In the bear market, we, see all the, poor allocation of capital from the last bull get filtered out. And then, also anytime anything has any, resemblance of success, then we immediately see dozens of copycats flood in and try to take different angles to what they're doing, because the friction to launch something is just so low. And so, yeah, I think because of that, in an industry that's so early as crypto, that's moving so quickly, I personally just don't feel like I'm able to say this is going to be the new breakthrough use case of crypto in 3 years. It's just not my, realm of expertise. But yeah, I mean, listen, if you have large account, people ask you to do like these undisclosed, token shills and stuff. Again, I've never done an undisclosed token shell in my life, but all that stuff is there for sure.
And you see people taking advantage of that every now and then, right? I mean, certain people talk about one thing for a certain period of time and then they move on to the next. You can make out. I mean, if you are somewhat smart, you will figure out who's doing what. So, yeah, I get
I
that.
think my take is I think it's fine as long as you disclose, right? Like
100%. Yeah, of
you're
course.
just getting favorable terms on a deal. What I think is a no, or at least in my book, is if you're posting about something positively and you've gotten some OTC round to get in 75% lower, but if you're like, hey, I did the round or whatever, I got these terms on this OTC deal with the foundation or whatever. I mean, I think that's fine.
Right. And I noticed that recently, since you turned like short term bearish, people have been nasty in replies, right? I mean, I'm pretty sure that this is not the first time you are facing this in your replies, right? I mean, when an account is that large, everything that you post probably has the other side, and those guys want to come after you. So it's not new for you. But how do you deal with that?
Yeah, I don't know if anybody's ever asked me that before. It's definitely, having a big account, you can't sit here and say like, oh, like poor me. Like there's definitely benefits to it, right? I mean, the biggest are, having distribution. If you do something that's relatively cool or your friends do or something, you can get the word out about it, right? The biggest one I would say is just meeting people. I mean, I feel so fortunate to be able to just DM anybody really and just, say, hey, what do you think of this? Or, hey, I saw you mention this. Can you send me some information to learn more about this thing? Or, hey, I didn't know that you were here while I'm here. Do you want to meet up and get a coffee? Like stuff like that. I've met a lot of people in the industry. I think networking in crypto, and not that I ever try to meet people just for the sake of like networking, but like, meeting cool people is as simple as just DMing somebody in crypto. I mean, I feel like the flow of information is still pretty free. And then there's just kind of this culture of people like to share their thoughts with each other. So that's definitely the benefit side. But, the drawbacks are definitely just having to deal with, a ton of pushback whenever you say something that somebody disagrees with in terms of market views. And politics are one thing. I've definitely fired off a couple political tweets over the last couple of years. Like I'm human. I've tried to generally like steer away from it, but I can't say that like I've never tweeted about politics. But the market view stuff, it's like, to me, if somebody has different views, it's I want to consider your
Yeah.
view. Like it's different than what I'm thinking. So, maybe I'll poke a hole in my own thinking. But, especially when you're bearish on Twitter, which for me is like pretty rare because I'm like generally like permeable, on crypto, like long term, Bitcoin's going to a million a coin type of guy. I mean, I think I've been like nonstop bullish for like several years at this point from like when we kind of started ripping off at 2023 lows. But yeah, I mean, when you're bearish on Twitter, you're basically like telling people indirectly that like you think that they're going to lose money. And so there's just like this inherent, I think, like human pushback to hearing that. And then, it almost feels like maybe to some people like it's like some weird, like personal thing. But, I just trying to be objective. And, I'd be lying if I said like it doesn't like take a little bit of a toll on you. And it's like a little bit like, oh man, like I got posted a couple days ago. Market traded up to the bottom of the range again. I said, hey, I'm still not like chasing this here because we basically in like 3 hours had this like teleportation move from 85K right up to 95K. And I'm like, listen, like I'm not chasing this right here. I may not get like my buys in like the mid 70s that I have been kind of looking for. And like I'm open to buying higher at this point, but I'm not chasing this right here. And, just a bunch of crazy stuff, like probably the craziest batch of comments that I'd ever gotten. And then the next day, the market rolled over and I put out that tweet because I was just like, you know what? Like, I don't know, to some extent, it's just when your account gets big enough, like, it's just not really worth it to share individual trading ideas because it's just like, at best, you're right. And then people are kind of like, oh, you have a big account. I'm wrong all the time, right? Like, I'm a human being and I'm like still figuring this stuff out myself. So, when you're right, people are like, oh, you're supposed to be right or whatever. And then, when you're wrong, or, when you say something that people disagree with, they just come at you. And it's just like, I don't really have anything to get out of sharing my individual trading ideas, really. So I decided I was going to take like a short break from it, but I'll probably be back for sure. It just was for me kind of like, all right, I'm going to take a little step back from sharing this stuff so intimately on Twitter.
It 100% makes sense, but I thought you would just be used to it by now because, yeah, like it's not the first time it's going to happen to you. Probably not the last time, even when you're back and you tell people that, okay, be cautious. Yeah, there will be people who will say all kinds of things that I think. But yeah, what you do is like great. Like people like me have benefited from what you do. So thanks a lot for all the things that you put out again, right? I mean, this is from those people who don't respond to those things negatively. But yeah, like, yeah.
No, thank you, man. That means a lot. And yeah, I mean, of course, always appreciate everybody that, is quietly supporting and stuff. Again, I'm not like walking away from Twitter. I was like, okay, I'm going to take
Yeah.
a step back for a little bit. This is like a little crazy.
All right, so let's discuss this a little bit, right? I mean, for a solo investor like such as yourself, maybe like 4 years ago, 5 years ago, someone who's doing that right now and wants to, along with the investing and trading, they want to grow their Twitter account. What would your advice be to them?
I think at this point in the kind of evolution of the internet and social media, if you're just posting stuff for the sake of like posting something from like you put together like a social media strategy or something, and you're like putting out regular tweets because you have some like social media content guy that's like putting out like these like corny generic tweets or something, or like you're trying to purposely do like, I think people on the internet can see through that now and they don't really get drawn to that stuff. I think a lot of that is because I think a lot of it's been commoditized. What I think is, super desirable to people, or at least me personally, when I'm on Twitter, is just finding somebody that's just genuine and just like trying to tell it how it is and just be honest. I think if I was going to start an account today, or like anybody was starting an account and like was trying to grow their account, I would just say to follow what you're interested in. Like if you come into the market and you're genuinely interested in meme coins, then be the meme coin guy and share your process and, try to add value for the people that are reading your stuff. If you're the DeFi, farming guy, then you kind of share some of the thoughts that you have there and some of your strategies there, or, maybe your ideas after you've filled your bags, and, I think that's probably the biggest point, because if you're not really interested, then I think it's people will sniff right through it. Yeah.
Makes sense. Makes sense. Thanks for that.
I guess that's the other point too, is like, if you absolutely love it, you'll just be obsessively, trying to communicate with people about stuff all day, and you can't like fake that, I think. So,
You can't fake that
yeah, you
100%.
gotta
Yeah.
have the like obsession and stuff as well.
I mean, something that I have observed with myself every time I think of something, and then I start getting into this mode of second guessing myself. I'm like, oh no, this is so obvious, right? Why do you want to even write about this? And turns out that someone else writes the same thing and gets a ton of engagement. And this has happened like countless times with me. So, yeah, I mean, forget about who is.
I mean, you're synthesizing information in a way that people can understand. That's a value add in itself, right? I mean, there's plenty of accounts on Twitter that, I mean, and everybody's taking a jumbling really of other opinions spilled with their own take. I mean, I am. So, I think there's value in basically aggregating information into one place, making it digestible. And like you're saying, maybe you're saying similar things to other people, but you put it in a way that people can understand. And that's a value add for following, somebody for free on social media for sure. So, yeah, I think, maybe it's not even just like the individual category of what you're kind of obsessive over and kind of talking about. Maybe it's just, to your point, also it could be the way that you're presenting the information is unique.
Makes sense. Yeah. All right. I wanted to ask you about, you've interviewed like Michael Sager on your podcast. Like this is what you were telling me before we started recording. Like with respect to strategy, previously MicroStrategy buying, 45 billion dollars worth of BTC, or at least like probably that's the value, right? At this point, somewhere in the ballpark of the BTC that they would. And then there is this whole narrative that, oh, countries will start buying Bitcoin and more companies will start doing so. How much of that do you think is happening and is, viable in thinking in that direction? That, okay, this is a trend now and not a one-off event.
Great question. I mean, I generally think over the long term, we'll have more sovereign wealth funds that buy Bitcoin, and Bitcoin continues to kind of solidify itself as kind of a global strategic reserve asset. That being said, I think you'd have to ask somebody who's kind of in the public pension fund or kind of, pitching funds to sovereign wealth funds or pitching, assets to sovereign wealth funds and in that world, because I don't really have any insight on like the tactical like integration of these things. We've seen a couple of states put some pension funds into Bitcoin. I believe Michigan, Wisconsin. I saw something about Florida was thinking about doing it, but don't quote me on that. And then we had, Abu Dhabi came out and announced that they bought, a mid, I don't know, it was six or seven hundred,
I think 500
500
million,
million.
500, 600, yeah, somewhere around that.
Yeah. So, I mean, these people are starting to dip their toes in the water, you know, locally. Sometimes these things tend to be kind of top signals in the same way that like if you remember like Canadian, we had this big Canadian pension fund that bought the top in 2021 and then puked at the bottom. I think Abu Dhabi might be a little more Chadley than the Canadians, just poking fun. But yeah, I think locally, that with pairing that with Michael Saylor's buys and like no follow through kind of made me cautious recently. But like at a high level, I would expect that to continue. We have the SAB rule reversal recently, which I think is a huge deal. And we saw it get some attention, but I think it got drowned out in some other stuff that happened right after. And, that will unlock financial products at all the big banks for crypto stuff. And that includes, an active lending market, which will unlock a lot of liquidity from the crypto market. And in general, I think will just make people more, akin to allocating. So, yeah, I think generally it's a trend that I expect will continue. And I think over the coming years, we'll have, probably a G7 country that's taking a substantial allocation if it's not the United States itself.
Right. So I take that you are not long-term bearish.
Definitely not. The way I kind of see the crypto market is I compartmentalize everything. You've got like Bitcoin and you've got everything else. Bitcoin is this pure, pristine reserve asset. I think it's the greatest reserve asset, the greatest form of money that human, species has ever seen. It's a better form of gold in every way. It's kind of this hedge against, chaos on like kind of a global scale. I could go on and on and on about, why
Yeah.
Bitcoin is, why the orange coin is good. But I compartmentalize that, and that's kind of a hedge on all the debt stuff. And then we've got the crypto world, which is kind of a combination of all these like weird startup be looking, protocols, projects, some with revenue that's getting returned to token holders, a lot of them that's not, a lot of them that don't need a token at all. Between that, the kind of, I guess, verticals that I'm most bullish on, obviously Bitcoin, stable coins. I think stable coins will continue to grow, go to several $trillion, in the total supply. The United States will continue to lean into stable coins because they're good for the dollar, because it's creating demand for US treasuries. I don't know what the ranking is now, but I know Nick Carter put out a presentation at one point saying that the stablecoin issuers were like the 14th or 15th largest sovereign hold of treasuries. So,
Treasuries.
I mean, we might have worked our way up a couple spots on that list at this point. I don't know. I'd have to go look, but I suspect that they'll become top 10, maybe even top 5 in the next couple decades. So that's a mega trend that I think will continue. I posted this yesterday. If you want to be reminded that crypto has product market fit, try wiring money into a centralized exchange when you're trying to chase something that you think is going to start to move, and then start watching the asset run away while you're waiting for your wire to settle like a boomer. And then you feel like, you all of a sudden have become a stablecoin maxi. So yeah, just Bitcoin stablecoins, I think we'll see more tokenization of stuff. Kind of on the fence about, on-chain equities, but I think that'll take a very, very long time. So RWA stuff in there as well. And then we've kind of got, kind of the crypto casino basket of, just speculating on things, which I don't think is going away anytime soon. I think now, obviously, you're seeing favorable regulation for crypto in the US. And so I expect crypto continues to take share out of, retail participating in equities trading, as well as out of the sports gambling market. And I just think it's the greatest form of speculation that humans have ever created. And so I suspect that, over time we'll see more and more trading activity going on for speculating on crypto assets as well. And then within there, I guess, there's things like gaming, are we able to kind of tie in AI at some point? That's a sector that I still think will see get some traction. We kind of had this mini hype wave at the end of last year into the beginning of this year. We ended up not really seeing any real agents come out of that at all. But that's still something I'm looking at.
Right. So you mentioned that you kind of compartmentalize your high level long term Bitcoin thesis and work on what is happening in the markets for now. So like how do you translate this into managing your own portfolio? Like, I mean, is there a core portfolio that is like long only and there is a satellite portfolio that you take tactical advantage of whatever the market situation we are in and get in and get out of assets? How do you think about that?
I think you hit the nail on the head. That's exactly kind of how I've structured it. So basically, my portfolio is set up so I have a core Bitcoin, buy and hold. I try to add to it at relatively low prices that I think are good, long term, prices. I have that, sitting there, never will move. I intend on holding that at least for another decade. Bitcoin, I think, is if I had to close my eyes for 10, 15 years, my highest conviction, asset in the world. I think it'll continue to outperform everything else on a compounded annual growth rate basis for the next 5, 10 years, although that will diminish. So that's kind of my base asset that I have in my portfolio. And, whatever Bitcoin's down from 110K to, 80K, whatever, like I don't really care. It doesn't really faze me because I'm, so long-term oriented. Then I've kind of got a lifestyle buffer of T-bills, cash, and then I've got kind of the actively managed portion of my portfolio where I'll put on things like the Coinbase or Wolf or Baba recently. I played some of the AI stuff at the end of last year. I played some of the meme coin stuff in the middle of last year. So that's kind of the portion of the stack that I'll actively move around. But, with Bitcoin, there's always, this sounds a little wonky, but like there's always this crazy upside risk of you could have a couple day stretch where one day, you could have some large country come out at this point or, some super large, player on Wall Street or something, or, Apple comes out and says that they, took a position, on their balance sheet or something crazy like that. And you could get a 15, 20% gap up on Bitcoin in a couple days and never get those prices again. So I have a relatively decent cost basis on it as well, but I don't want the taxes on. So yeah, I always keep a core long-term Bitcoin position in spot.
Awesome. You also mentioned that different crypto sectors that you are interested in, right? I mean, and after Bitcoin, you talked about stable coins. So, with respect to stable coins, like how does an average investor who's not into equity rounds of Tether and Circle and whatever, how do they place this bet on, stable coins going to trillions of dollars?
Yeah, I don't have a great answer. I think if there was a investable vehicle for stable coins, I think it'd be a really interesting vehicle to pair things against and put on some really interesting trades. And just in general, that'd probably be something I'd add, with the Bitcoin as kind of a long-term just buy and hold. Maybe Maker is the best answer at the moment. It's obviously trading a bit expensive relative to fees and revenue.
What about it?
Circle IPOs, maybe, because then you've got exposure to the second largest, stablecoin issue. I do think that it seems like Tether's kind of running away with it over the last couple of years for a couple different reasons. So I don't really think that there's a great answer. There was Coinbase, and that was part of why I bought Coinbase at the end of 2023 because they had the stake in Circle. So, you got kind of a portion of, the upside and stablecoin growth from there. But yeah, Athena kind of, but that's more of like, bet on the basis trade.
Right.
There's Plasma, which I think is interesting. I guess they'll come out in the next couple of years. They're like backed by Tether, this Bitcoin stablecoin solution built on top of Bitcoin. So yeah, I don't think that there's a great answer, but if there was, then it'd definitely be something that I'd be watching super closely.
And since you are so deep into Bitcoin, what do you think of these whole Bitcoin L2s and bringing DeFi on Bitcoin type of solutions?
Yeah, if I'm being completely honest with you, I haven't really looked super deeply into it recently. I know the Reflexivity team just released a report on Core and then also Babylon, so those might be interesting to check out. I know they like just published those in the last week or so. Again, this plasma thing seems interesting to me. But yeah, I think we haven't really seen that stuff take off in a big way. I was pretty optimistic about the ordinals. Obviously, that was just, kind of pure speculation, but that kind of was a bit of a flash in the pan, at least at the moment. It seems that way. I'm not, completely counting them out or anything, but I don't have anything outside of, again, maybe plasma. I would say that I feel like I have a relatively high degree of confidence in doing well built on top of Bitcoin.
The auditors were great, right? And there was one point where at least I started feeling that, okay, I mean, obviously this is a surge and it sort of dies down. But I was hoping that the fees, on chain fees for miners, I mean, that kind of stays at least consistent around like 10 to 15% of the total miner revenue, right? But that sort of did not happen.
Yeah.
And
I tried to put a trade on when the ordinal stuff started to take off because at the peak of the little flash in the pan towards the end of, I haven't looked at ordinals volumes recently, so I might be wrong and keep saying they're a flash in the pan. But I remember there's a period where they really, really ramped up in activity and fees that they were generating for the protocol. And I started extrapolating out. And I'm like, man, well, like if this is like the NFT bubble part two, then like these miners are about to be printing and they're like low key undervalued. So I tried to do like a short term trade on some of the miners with the ordinals activity, but then as soon as it started to pull off over the next week or so, then I just sold it.
well, I'll tell you what, this is what happens when people like making VCF models way too much. And I'm one of them.
Yeah, it's probably right.
Yeah. But yeah, I mean, like fees need to increase, right? Because miners need to be sustainable and whatever. I mean, there are some Bitcoiners who deny that and say that, I mean, the usage will go up and whatever. But there needs to be something that helps fees at least get to a relatively stable level for miners. I hope with OpCat, like those things kind of become a reality. But I don't understand it technically well enough to take a bet and say that, okay, this is going to happen because making changes to the Bitcoin protocol also is not easy. So you don't really know whether OpCat will be, incorporated when it happens. And,
Yeah,
like,
you've got the like long term security, kind of budget concerns there, but I really think are the only factor to say for me that like you'd need to have something built on top of Bitcoin. I generally think that the network will be fine, even if hash rate pulls back. I still think it'll be big enough that it's secure, just based on fees and not issuance. But I definitely think that something being built on top of Bitcoin in a secure way would absolutely help the concerns around that issue. But for the medium term, for the next 2 decades, I don't think that if nothing's built on top of Bitcoin, that I would sell my Bitcoin because all it needs to be is just a sovereign reserve asset, and Bitcoin doing nothing is kind of what it was designed to do for.
what is it?
Designed
Yeah, yeah.
to do so.
Fair. You mentioned like crypto AI a little bit, right? So I got to understand what have you looked into? Are there any applications that caught your eye and you went like, okay, this is in the initial stages, but if this kind of, they built it out, it would be great.
Yeah, I initially looked at virtual at 78 mil. I passed. I saw it again at like 300, 350. Bought. Ended up rotating into the Solana side. Initially it was basketing to that into a couple different assets. Didn't really realize AI16Z was the big winner out of Solana until maybe 600 or 700 mil as it came out of that correction from initially that first wave of like Shaw FUD down to 190, and I kind of picked it up before it made new all-time highs coming out of there. But I ended up round tripping a good portion of that, and I also had like a bag of ARK as well. I think the reason was, I was optimistic that, I ended up basically coming out of it like basically flat. And I think the reason is there were no real agents that came out of the whole thing. And the value accrual, they ended up not figuring it out. They were talking about AI16Z was talking about doing, this launch pad, and they were going to figure out, some way to kind of tie like pairing the tokens to drive, some type of value accrual to the token. And they just never, it seems like, really figured any of that out. I might be wrong because I haven't been paying super, super close attention recently. They might have changed some of that stuff, but I think that's why it ended up kind of just Burj Khalifa, just reverting all the way back down. That being said, though, I think the lowest hanging fruit for an agent would be basically something that can be a front end and, disrupt or maybe even partner with like a Phantom for distribution. But it would be some type of front end to interact on chain that's written in kind of natural language. So basically, if you could just type hey, buy me whatever, X amount of will coin. And then it goes in and, we'll average out the buys based on how you asked it to space out the buys and say, I don't want to incur more than this percent slippage. And you basically type out an order like you're, sending an email to a broker to put an order in, but just do it through this on-chain interface saying, whatever, hey, let's stake these assets. I think that's super interesting. Or, hey, send money to Bob and, it'll just go and send, the stable coins to Bob's wallet. That type of stuff I think is interesting because it could potentially disrupt like a Jupiter or, partner with the Jupiter and a Phantom, then kind of aggregate basically all of the on-chain activity and improve some of the UI UX. There is I'm not going to say the name because I don't want to talk about microcaps, but I have a microcap that is working on this thing, but it's very, very small. So I won't mention it on here. But I think that's something that I'm keeping an eye on for something that would have like direct kind of utility on chain. Everything else, we just haven't really seen anything that's shown that, it needs to be on a blockchain.
Right. I think to extending this further, like I have tried some of the apps that you are mentioning, and Daniel says does Hey Anon. I think that was the closest to doing like what you mentioned, right? I mean, so I told like, okay, this is the token that I have. Here it is, and swap this for whatever other asset on a different chain, and it was able to do that. But the issue with that, I mean, issue with all these kind of projects right now is that they are terribly slow. So if you know how to bridge and how to swap, you would manually do it like way quicker than the app itself, right? But one thing that was good with this particular application is that it did not ask me what bridge I want to go via. It did not ask me what exchange I want to use to swap tokens. So from that standpoint, right, it kind of did a good job of abstracting the blockchain away from the user. And I feel that it's going to like get better as we go forward.
Yeah, I think that's what we would need to onboard, the next wave of people that aren't, especially like super, super tech savvy. So I tend to agree. Yeah.
One issue with this is like people who are trading on centralized exchanges right now. And I was talking to someone before this about this particular segment. The issue is that centralized exchanges play a part of curators of assets for investors or traders, whatever it is. I don't have to care about the contract addresses and tickers looking the same way or whatever. I don't need to verify when I'm trading on centralized exchange. But when you take it to DeFi or the Wild West or whatever, there's suddenly an issue with users having to deal with way too much of information, right? So the job of curation needs to be fulfilled by some agent along with abstraction. So I think there should be some sort of curation, intelligence, and abstraction for these applications to work in the way that you were saying.
Yeah. Yeah. I think that all sounds right to me.
Other than this, like I think hype was a great breakout success for the cycle in terms of a business model or a business that doing well from a business standpoint and a sustainable standpoint. I think that has been our missing spot as an industry, right? Because we were so heavily reliant on these 4-year cycles, founders always kind of knew that, okay, I've worked on this thing for a few months and I only have like these few months left so that I can make money in this cycle, right? And keep my team afloat or whatever. So probably that was the motivation to do all kinds of things with tokens and not having a product in place and not thinking about sustainability and whatever. Like with this backdrop and the market situation that we are in currently, is it fair to say that we are past the 4-year cycles that were dictated by Bitcoin halving, essentially? And will we be forced to think about building some businesses and then, like put basically the token price secondary, just the way publicly traded companies do?
Yeah. I think on the first portion, I do think that the traditional 4-year cycles as we know them are over. I do think Bitcoin will keep having 30% drawdowns. We get a big credit event in traditional markets. Bitcoin's not immune to that. We could see these, flash crashes, down in BTC, but I generally think that the volatility will get smoothed out quite a bit. I think Bitcoin will continue to trade with the higher correlation to, macro assets, it'll be, kind of viewed as just, another asset kind of in that basket of how you can, trade different macro factors. On the hyperliquid thing, yeah, I mean, hyperliquid has definitely been one of the biggest successes, if not the biggest success of the cycle. And it seems like basically that and Solana, or if you want to throw Pump Fund in there. But I think hyperliquid did almost everything right. They built a product that people use, generating millions of dollars in revenue every single day from trading fees, etc. And, they launched the token after, they built out a working product. So I tend to think that that'll be the template that people will use going forward. We see a lot of these games when tokens launch out of the gate with, restricting the float, trying to do these games where you're, strategically timing announcements to keep the token propped up, all these types of things, pre-product, pre-anything, trading at, hundreds of millions or billions of dollars of valuation. So I think, Hyperliquid's kind of wrote up a playbook for building out a real working product beforehand and then creating the token afterwards. Because, I mean, I just think in general, it's very difficult for any rational person, and maybe ethical is kind of a bit of a, big question mark. But I think for most rational people, if you've got tens of millions of dollars in liquidity and, you haven't even really built a working product, but you could take it off the table, like most people would take that off the table. And so I think that's just a behavior that we see in crypto where, people get that, not even fully building something out, but, they've got liquidity, they've already monetized the thing. And so I don't have a great, solution in mind. If I did, I'd probably be raking up a bunch of advisory fees, but I don't. Of, how do you basically incentivize people outside of just locking up tokens to, only get rewarded after you build a real working product?
All right, that's a fair answer, I guess. Yeah. In terms of how the industry has moved in the last 4 or 5 years, what are one or two things that you liked, and what are the very broad gaps that you see? I mean, these need to be filled for us to, go from 3 trillion to maybe 8, 10 trillion.
Yeah, a bit of a vague answer, I guess I'll give, but I just think in general, the regulatory environment just needs to be clear. We don't need, perfect, environment exactly, and in favor and everything's, all rosy for crypto, but we just need a regulatory framework at all to work off of, which we haven't had to date. And so I think that's probably the biggest unlock. Again, I think the SAB, reversal of the SAB rule is big for the evolution of the asset class and solidifying it as like a real institutional asset. So I think things are trending in the right direction, but it's a question of like that might be a multi-year trend, or at least something that maybe takes 6 to 12 months as opposed to something that's directly impactful in the next 1 to 3 months. And so, there's a question of somebody that's just, buying and holding the stuff for a couple of years. Like the backdrop absolutely undisputably looks great. But, from like a more tactical perspective, it's more of a timeline of kind of when does this stuff get implemented? And that might not be for, a couple months or maybe even, 6 to 12 months or something.
All right. Apart from regulation, is there anything else that you think we should do differently, should change?
Well, I think there's things that are unlocked by the regulatory stuff, having real value accrual mechanisms back to the tokens, I think will unlock pools of capital to be able to feel like they can value this stuff and get behind it and like why they should own the token. There's many examples and I don't want to like, dump on anybody's parade, but like there's plenty of examples where there's a foundation and then you have the token and there's no value, the foundation's like raking fees and there's no value accrual to the people that have, loyally held the token for several years. So yeah, I think the regulation unlocks the value accrual. Also, I think part of why speculative assets in crypto have done so well over the last few years, definitely the biggest portion is people just want to speculate. But a big part of it, I think, is if you're coming to it with this approach of, well, none of these things have value accrual. None of these things are able to direct the value to the token. Why don't I just go all the way to owning the most speculative of all? Because these things don't actually have any underlying tie to any of the actual fundamentals that you're referring to. And so, I went on 1000X, I don't know, the end of October, right before Trump got in office and basically said, like, I was bullish on pretty much the whole market, but I felt like the meme coin stuff was going to kind of phase out at that point. And the reason was basically because of what I just described. The bull case for the memes was always none of this stuff has any value accrual. It's all just speculation. So if it's all just speculation, why not go all the way to the extreme and buy, whatever meme coin? Again, I traded the memes, right? I talked about some memes, like I had my fun with them. But, come towards the back half of the year, I think it became apparent that if we're going to have favorable regulation in the US, then that kind of hurts the bull case for memes, because then all of a sudden you could say, okay, well, maybe I can actually buy something because, I can look up the underlying revenue that the thing is generating and it's going to tie that back to token holders. And I can think about relatively valuing this kind of like a real business or a startup. And I think people want to buy, maybe this is like a controversial take, but I think most of the people in the industry are bullish on the industry and they actually want to bet on things that are actually doing good stuff and are finding product market fit and are actually, generating value that they can kick back to the people that are investing in them. So that still is my stance. Of course, the meme coin stuff will come back in pockets at some point. People love to speculate, myself included. If we get easy money come back into the system at some point, I tend to think that that'll go right down to the end of the risk curve for sure. But I think the marginal dollar that maybe went into memes specifically because of this thesis that none of this stuff was generating any value at all and it was all just straight vaporware speculation, I think that argument's quite less compelling now.
100% agree with you. I think fundamentals are the narrative for investments, right? I mean, everybody will try to figure out what is making the most money for the shareholders and try to bet on that thing wherever they see a mismatch in value versus the price. But because for us, like there is no way to tie value to price or price to value, we go in search for the next narrative, which is and where we are early, right? So I think that is spot on. Yeah, 100% agree. All right, man. Is there anything that we want to close this with?
Yeah, I guess the other thing to tag on too is people are willing to hold things for longer if they feel like they can actually tie a fundamental reason to hold them, right? And I think that's just healthy for the market, because part of the reason why the life cycles for these things are so low is just nihilistic view of like this is all vaporware, and as soon as I hit a 2x, I'm out because someone else is going to dump on me. But yeah, part of the reason why equities are up only is, like obviously the Mag 7, look at Costco. I mean, it's because people can go to sleep at night knowing that I own a good business that's going to keep generating value that I have the right to as a shareholder. And so I think that also is positive for just the, kind of psychology of people being willing to actually hold something for more than a week. I mean, it's kind of become a meme at this point that the Solana trenches have these like, smaller and smaller kind of euthanasia roller coaster over the last couple of years of life cycles. And, now people are, I saw something, I don't know exactly what the statistic were, but basically like a much, much lower amount of assets are making it into the bonding curve and even fewer are getting to, 100 mil, 550 to 100 mil market caps anymore. So yeah, I think that would be positive for that too.
Yeah, I think more than 65% of pump fund tokens of late haven't been graduating out of the bonding curve.
Yeah, exactly. So that,
We need more of that, I guess.
Yeah. Well, listen, again, it goes back to, I think crypto is the purest form of capitalism, right? I mean, 2022, I don't want to get too wonky, but like if you think of the market as almost like this like living organism or something, you had the market basically purged out all the trash in 2022, right? It drew down enough and it's kind of this self-cleansing vehicle of getting all of the, well, as much as it could, all the fraud and misallocation, etc., out, and then you start the cycle over again and the whole thing happens. And that's why you need market cycles, and that's why you can't have the next big move without purging a lot of the waste from the prior run, which that's a whole nother philosophical discussion about like the moral hazard brought on by the Fed after 2008 and all that. But yeah, I think crypto is a very self-cleansing system because of the lack of regulation and account. It is, kind of the Wild West. So it's a double-edged sword for sure. Like it's very dangerous to participate in, especially if, you're super uneducated about the space. but it also from, this is kind of adds to the long-term bullishness of being allocated to the asset class because of the lack of regulation. It does become this very, kind of pure vehicle of capitalism and becomes this kind of self-cleansing thing that over time should continue to, what happens when somebody gets burned on a meme coin? Well, they maybe put a little in, put a less in on the next one, and then they get burned 4 times in a row, and they're like, you know what? Forget this. I'm done. Maybe I'll come back in a couple months. And that's been the sentiment of my non-crypto friends. They're like, I'm done with this pump fund stuff, man. I keep losing money, and but if they're making money, they're going to keep rolling it again and again. But as soon as people start losing money, they're like, okay, you know what? I'm taking a break. I'm not winning anymore at the casino. And so I'm going to stop allocating capital. And then, what happens? Then the revenue that pump fund is generating. And again, we haven't seen this in a big way yet, but over time, what happens? Same thing with the NFTs, right? Infrastructure around them, the revenue that they're generating declines. And so people stop building as much infrastructure, to keep supporting the stuff. And then, the whole kind of complex, at least corrects. If it's got staying power, then, you'll have the kind of core believers and stuff that stick around, and then the thing could go back up again, but it'll wash out all the excess. And that should, again, yeah, it's a cool thing, man. Markets are a cool thing.
I love that. I love that. So short term, mid term, long term, like what happens to markets?
Yeah, I don't have.
Not necessarily the price.
Yeah, sure.
I don't know.
Yeah, okay. I still am generally cautious on risk assets over the next, 2 or 3 months because of some of the stuff that I described. Locally, we've gotten basically just a straight down only move on equities for, what is it, 15 days now, to 10, 11 days now. I'm looking at the NASDAQ right now, down 10% off the highs. Probably the most, aggressive correction that we've seen since maybe August of last year, and then July right before that. So I don't know. In the short term, maybe we get some mean reversion on some stuff. I bought some things yesterday when Bitcoin kind of retested, around that like 82, 83-ish level. I don't remember exactly where I did. I bought some Aave at like 185, 190. I sold it. Short term, I don't really have as much conviction now. I think depending on how we trade into this conference on the 7th, that might be short-term sell the news. Again, generally cautious on risk for the next couple months, but high time frame, long-term, as bullish as ever. The industry is in a great spot. We flushed out a lot of excess recently, which I think is a super healthy thing. Derivatives data is reset. We've got very favorable regulation as a backdrop. We've got the United States government, for crying out loud, as our tailwind. So, it's hard to look at the, 1 to 3 year view and say that you're bearish, I think.
Fantastic. Anything else before we close?
Nothing at the top of mind. I'm just watching closely. I think these are the periods in the market where everything's quiet, but you start to see kind of the seeds that are sown for, maybe the next kind of, the leaders of the next leg up, or maybe new themes that emerge and things like that. So, I'm in all my Telegram group chats and, paying very close attention, trying to read research and, scouting Twitter, etc., to try to pay attention to kind of what's going on. Whenever you have a market-wide correction, what always happens in crypto is everything's like super highly correlated. So, but, what you can see is, what's kind of holding up on a relative basis. And then that kind of gives you a bit of a hint in these like big drawdowns as to what people are interested in, bidding, or what are people not interested in selling. And so, I've seen some interesting stuff over the last week for sure there.
All right. Brilliant, man. Well, this was fun. I loved it. I hope I covered, like, I tried to cover as much as I could. I mean, there is still stuff on my list, but I guess that's probably for another time. So thanks a lot for hopping and spending the time.
Yeah, absolutely. Thanks for having me on. This was awesome, man. I would love to come back. You asked some really good questions. Usually when I come on these, it's just, what do you think the market's going to do in 2 weeks or whatever? It's cool to talk about some of the, stuff around the business and, the account and kind of more like general career type of things. So, yeah, man, appreciate the thoughtful questions for sure.
Thank you.